Welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today I'm looking at Tesla stock here in the year 2020. This is after the stock market crash, kicking off the month of May by digging into Tesla stock. As a reminder, my stock picks and projections are for entertainment purposes only. Please talk to a financial professional before investing in the stock market. However, if you do enjoy stock market analysis and going deep on the fundamentals of stocks, then please subscribe to the 40 Finance channel. Thank you to everyone for your support so far. All right, first things first is that technically I've been a Tesla bear for the past couple years. This stock to me is and remains to be a roller coaster ride. Very little of it that makes sense from a fundamental standpoint. So usually when you have stocks like that sort of lack fundamentals and they start pushing them more to like an emotional trading game, typically those are stocks that I stay away from, but that's just my opinion. And obviously the thing that we can't ignore here and what I'm starting to come around on is like, hey, regardless of what I think, Tesla is just straight up making money from an investment standpoint. So it's important to know that I have plenty of doubts about Tesla, but what I'm starting to realize, particularly as I come into this middle part of 2020, is not only are there a lot of people against me when I speak bad about Tesla stock, but also that it's starting to become unavoidable due to its size. Regardless of whether or not I'll own Tesla from an individual stock standpoint, it's already making its way into some of the bigger ETFs. As far as stuff that I hold, it's in my ARKW Next Gen Internet ETF that I've been into for 2 or 3 years now. Catherine Wood added it to that one. So I do have a slice of Tesla. In fact, it's the #1 holding right now in that ETF. And then I'm still waiting for the right opportunity to jump into QQQ. Sort of personally ran out of liquidity after the market crash because I was buying up some of the positions that I already owned. And I was ready to go back in and get into the QQQ, and the stock market hasn't been down very much since, so I'm holding back. Eventually I will be in big on QQQ, which now holds Tesla. So regardless of an individual stock opinion that I have on Tesla, it will be a part of my investing portfolio, at least as long as I have those two ETFs. All right, taking a look at Tesla stock today, you got a price of $784.24. No current PE ratio because the profitability hasn't been achieved yet. There was some talk that it could be at the end of 2020. I'm not sure with the virus and everything if that's going to be achievable, but it seems like almost for certain 2021 Tesla could materialize their PE ratio. 52-week range, and I alluded to this earlier. I mean, unbelievable, $177 at the low side up to $968.99. So that kind of spread on a 52-week range is exciting depending on your exposure. It is also can be nerve-wracking if you come in on the high side and expect it to keep going. So just know that this stock is super volatile. Any sort of week-long period or month-long period could see substantial ups and downs depending on the sentiment of the market. So if you're a new investor, young investor, or you just don't have a lot of money to invest, Tesla, you just have to be careful and do your best to get in as low as you possibly think it could go. Forward PE for Tesla comes in about 200 according to Yahoo. I put a question mark there because there's just so much of the world that no one knows what's going on in terms of sales and unemployment and all those things. Tesla did improve their cash on hand position by offering a secondary stock offering. So they are now up to $8 billion in cash on hand, which is a much more comfortable level than they were at before, and debt load of $15 billion on paper. So So a pretty good ratio there. There have been times year and a half ago where that cash versus debt ratio was significantly more often to the debt universe. There was a time in 2018, maybe late 2018, 2019, that I wasn't really sure that Tesla was going to survive as a company. Be honest with you, the way it was going and all the behaviors from their CEO and debt and all that stuff, but they seem to have cleaned up quite a bit of that mess over the past year and a half. I included short percentage of float up there just to include it, 13.63%. That's not really too terrible, especially considering a volatile stock like Tesla, who's had a lot of run-ins with short sellers in the past couple years. 13.63% right here as far as April 15th is nothing to be too concerned about. All right, so let's take a look at the valuation metrics over time to try to figure out, with today's price, is this a good time to buy Tesla compared to where it has been in recent quarters. And you see on this chart, I've highlighted a handful of rows, most notably the forward PE. There's nothing to look at on the trailing PE. But if we go back to 12/31/2018, there was a time that the forward PE stood at 56 to 82. And you see, and this is pretty common for a company inching towards profitability. Profitability sort of shows up in the future and then it disappears because something else happens, and then we're opening new factories and doing new things. So it does look like, from a forward PE perspective, the 200 that's on the radar right now is much higher than any of the other numbers that have come out. So I see a couple 90s from 331 and 1231. Then we go back further and you got into the 40s depending on which quarter you ended. Some of this may have to do with their secondary stock offering. That could explain the jump because there's more shares. It could take it from that 90s level all the way to 200. I'd have to do more research on that. On the PEG ratio, again, we see that the 1.89 is definitely one of the higher scores compared to the last several quarters. So Tesla more expensive today in terms of PEG ratio than it has been even going back to 12/31/18. And then finally, price to book. As we look at that one, you know, this is basically the value of liquidating all their assets. Again, you're not quite at the highest mark because 331 2020 you're at 1460. Today you're at 1417. But generally speaking, we are at a high point for price to book over the last few quarters. All right, so all in all, Tesla is a little more expensive now at this current, exact price of $788 than it has been over the past several quarters. So just want to make sure that I'm calling that out. Price on this stock changes all the time by sometimes $100+. So I think, just looking at valuation metrics, I'm definitely not buying in at $788. All right, taking a look at the TipRanks dashboard to see what the best performing analysts say about Tesla for the upcoming 12 months. Quick shout out to TipRanks. I am a paid member. Use this service all the time to look at stocks on a number of different levels across sentiment, analyst rankings, things you don't see in like the basic Yahoo Finance or CNBC. That's where TipRanks really shines. My referral link is down below. If you're interested in supporting the channel, check out TipRanks and see if it's something you might be interested in. Taking a look at the analyst scores for Tesla as of today, you've got 4 buys, 6 holds, and 4 sells. So sort of a mixed bag there with Tesla analysts. You got a median target of 619.27 over the next 12 months. That is minus 20% from where the price is today. And some of that is influenced, quite frankly, by the different numbers that come in from analysts on Tesla. It's such a wide range, just like their 52-week range. We have a high bar of 968. The average, of course, is 619, and then there's a low bar estimate that comes in at 240. So with a stock like this, I mean, people are throwing darts. It's pretty obvious that they're just throwing darts. You're really trying to take a look probably more at that buy, hold, sell score, which it seems like the majority are in the hold camp. I would agree with that. If you are an existing investor, I wouldn't have any reason to particularly sell today, but I'm not sure that I would buy today at the current price, assuming you're trying to get in at the lowest available price. All right, a couple quick highlights here from Tesla's most recent quarterly reports. Their total revenue grew 32% year over year, and that was still, even with that gain, impacted by lower deliveries, and of course lower deliveries coming from the health crisis that we're seeing. One concern that we'll have to keep watching is average selling price decline further as our mix continues to shift from Model S and Model X to the more affordable Model 3 and Model Y. So that, I would say, is to be expected to some degree. However, you know, whenever you shift down to a lower model or a lower price point for anybody who's in business, obviously the goal is you have to make that up on volume. Make sure you're aware of the forecast for the cheaper models, because they will have to make up substantially more volume in order to equal the same amount of money as the higher selling models. On the profitability side, you got a total gross margin of 20%, which was their highest levels in 18 months. That's obviously a major positive. And then on the cash side, we sort of talked about this in the beginning, but quarter end cash and cash equivalents increased by $1.8 billion to $8.1 billion, driven mainly by our recent capital raise. Now the catch here is they raised $2.3 billion, but they only increased cash by $1.8 billion. So that difference, as they explained there in the last little box, is that capital expenditures increased mainly due to investment in Model Y preparations at the factories. And you could really go on and on with Tesla all day, and there's this good news, there's a zillion videos that talk about the solar roofs and the battery and all this thing. Those all have opportunity, I would say. Absolutely, and no one's going to argue that. What I will say though is, at least for today, the automotive side makes up far and away the vast majority of their revenues as a company. So if the factories shut down from the auto plant, the battery and the solar roofs are certainly not going to save this stock by any stretch of the imagination. That day may come in the future, but that day is not today. So keep that in mind when you hear people talk a lot about the diversity of Tesla. I would say that they have stable plans for diversity, to further diversifying in the future, but today's diversity is quite limited, at least in the financials that I read. That kind of goes back to like the Disney analysis I did a week or two ago, where I called out like, hey, you hear a lot of people talk about Disney Plus, right? And Disney Plus saves Disney during the health crisis and all these things. Not even close, guys. Like Disney Plus is like, I think I projected about $1 billion in revenue over the year, whereas the Parks and Entertainment division was projected to bring in $30 billion, right? So 30 billion versus 1 billion. Disney does not gain diversification solely through Disney Plus. Tesla does not gain diversification because they threw some roofs on a house. They're an auto company right now, and it looks like they have other interests. But if you're analyzing the stock today, just know that you need those auto numbers to come in. All right, so, and the bottom line for me with Tesla is I'm not a huge fan of this type of stock, which is, you know, an up and down roller coaster ride with the promise of significant gains and the risk of potentially significant pullback. However, I will say one thing, and that is the numbers are there. Whatever reservations I have against Tesla, they put the data on the sheet. Their stock price has gone up almost immeasurably. So for me, I'm glad that I have exposure to it and what will soon be a couple ETFs. It's still not one I would buy individually. They have definitely produced the things that they have promised. Another thing, if you're new to Tesla and thinking about positioning, you have to think about the health crisis and what it's going to do to this company in the short term. A lot of unemployment out there right now internationally, right? A lot of unemployment, which means lower paychecks, which means lower disposable income. Is Tesla going to be able to compete and make people step over the finish line to complete their purchase throughout this year? They're not the only ones with that challenge. This is not unique to Tesla, but I think the automotive industry as a whole is shaping up to have a really rough year as people kind of decide to hang on to that used car one more year till the world stabilizes more. And finally, the other thing that I always think about with Tesla for some reason, and it must just be me, is with all the manufacturing and factories and stuff that they have going on, they still don't produce a ton of cars. They produce less than a 500,000 cars. So I can't remember the exact number is, but it's around 400,000. I think I looked up Toyota last year. Toyota made 9 million cars. Toyota and Tesla are two different companies entirely as far as scale and reach. And there's a lot, you could go down a whole nother rabbit hole on that to understand just how big of a difference it is. And if Tesla is going to make it to the 9 million cars per year production, there's going to be some scaling pains. And I know that they're mega efficient with their factories and Elon's genius and all these things. That's great. You still have to ramp up human production, HR, deliveries, trucking, international, like the factory isn't necessarily the core of the scaling problem. You would think it would be, but Elon has certainly solved that. As you saw the pictures of the factories they're growing, there's other scaling problems to come into here. And one of them could even be, does everybody want the same car? Does everybody in America and international want to have a Tesla? Not, regardless of the electric, regardless of anything. Generally speaking, in America, people have had pretty strong opinions about, the vehicles that they like and why they like them and how it suits their personality. I'm just not sure that there isn't a saturation point for Tesla from a design standpoint that just some people just aren't going to be interested in it. So hopefully they've built that into their calculation. All right, final thought for the day is if you're interested in Tesla, you don't currently have a position, my personal opinion of a price target would be anything under 450. I think the market is just ran back up again for no explained reason. I pretty much wouldn't buy any stocks here today. I'm looking for another significant pullback. As I mentioned, I have some things on my list, including the QQQ. And when you get into the QQQ, just know that you have exposure to Tesla in that world as well. So if you're a new investor or someone that doesn't have a ton of money, instead of chasing 1 to 3 shares of Tesla stock, I do encourage you to research the QQQ because there's an opportunity in there to have a fantastic performing ETF with exposure to Tesla, and you're not going to get 100% stock gains overnight. QQQ is not going to go from $200 to $2,000 in the next 18 months like some people think Tesla will. However, it is an option for investors to think of, and frankly, that's the option that I'm going to play with Tesla stock. Hope you guys enjoyed this video. Please give me a like and subscribe if you did. I'll see you on the next video.